Afternoon, ladies and gentlemen. Welcome to this Monday afternoon's presentation of the Introduction to Weekly Options. As many of you read in the sign-up presentation or the general information on the webinar, today we are going to just discuss a history of weekly options. We're going to talk a little bit about the rights and obligations, and then we're going to go into some strategy discussion and use of the Power Options tools to help identify the weekly options on the various securities. If you have any questions during the presentation, please feel free to send them to me. I am going to try to leave 10 or 15 minutes at the end of the presentation to handle questions. So if you can, hold your questions until the end, and then we'll take care of them there. But if you do have a question on something I'm reviewing or going over, then go ahead and just use the question pod there to send me a question. If I can't get to it right away, one of the other staff members that is joining us on the webinar today will be able to answer your question. Well, let's go ahead and just get started. Let's go into our presentation. First, I just want to talk a little bit about myself. My name is Michael Chepka. I'm the Director of Options Education here at Power Options. I've been with Power Options for over 7 years now. I handle a lot of the free coaching sessions and education on the website. I've co-authored 2 books with Ernie Zerenner, one on naked puts and one on protective option strategies, married puts and collars. And we may be discussing a little bit on naked puts and collar spreads today in our weekly discussion. Power Options is a patented suite of tools that supports over 23 different option strategies. I am versed in all strategies on the site. However, I do not trade all strategies in my personal portfolio. Things such as iron butterflies, short straddles, short strangles, and naked calls, for example, don't match my personal risk-reward tolerance, so I don't trade them. Now, you may find it odd that I say that when we're starting a presentation on weekly options, but it's actually pertinent to the strategy discussion we're going to have in a little bit later on in the presentation, and we'll talk about that as well. Well, what are we going to be covering today? I'm going to go through a basic history of weekly options. We're going to touch briefly on, of course, the requirements and obligations of the different weekly options. Then we're going to discuss basic strategies used with the weekly options. Any strategy that you can trade with standard expiration options that expire on the 3rd Friday, you can trade with the weekly options. But what we're going to discuss is the strategies that I know a lot of the Power Options customers who are using weekly options will trade in their personal accounts, and their approach to using it, as well as what I'm going to try what I'm going to try doing in the near future as well when I see some opportunities. And of course, we're going to spend probably the last half of the presentation showing how to use the Power Options tools to identify the weekly option strategies, where you can find them, and in addition, of course, to using the portfolio tools just as you normally would with the regular strategies to help you with your weekly options. All right, well, let's get into the history of weekly options. Weekly options are basically the same as the standard expiration options. They have the same requirements and obligations on the underlying security. For example, a weekly option on Apple will represent 100 shares of Apple stock. If I sell a call, I have the same obligations I would have as if I sold a regular expiration option. If I buy a put option, for example, I have the same rights I would if I purchased excuse me, a standard put option on the index or security. Now, these were originally released on October 28, 2005. The only security that had weekly options that was released was the SPX, the S&P 500 index. Now, of course, because it's an index, the requirements were cash settlement. You wouldn't purchase 100 shares of SPX and then sell a call against it as a covered call, for example. Any of the rights and obligations were cash settled. And this particular one is also a Friday AM settlement, which means that the last time you could typically trade to close a call or sell to close a put, for example, would be on the Thursday before Friday expiration. Friday at 9:30 when the market opens, you cannot trade the index options anymore for the S&P and some of the other indexes as well. So really Thursday afternoon would be the last time to close or manage a position, and the settlement price usually came out on the index at 10 a.m. Now, shortly after that, through 2006, other weekly options were added to the indexes of the OEX, which is the S&P 100 index, it's American-style expiration, and then the XEO, which is a European-style S&P 100 index, and XSP, which is the S&P Mini SPX options. Later on, weeklies were added to the Dow Jones Industrial Average. Now going forward, just recently on June 4th, 2010, CBOE released weekly options on ETFs, SPY, the S&P 500 Spider, the Cubes, which mirror the NASDAQ 100 index, the 1/10th or 1/15th of the NASDAQ, DIA on the Diamonds ETF, which tracks the Dow Jones Index, and IWM, the iShares Russell 2000 Index ETF. Now, shortly after that, the weekly options were released for other ETFs such as FAS, FAZ, and GLD as well. And we'll go through a list of those very shortly. Now, on June 25th, 2010, if you were following the blog on Power Options, this is when the weekly options were released on 4 common stocks. So now, in addition to having the standard expiration on stocks such as Apple, Bank of America, British Petroleum, and Citigroup, we can now trade weekly options against them as well. This opens up a lot of doors for other management techniques and other possible strategies that you could use on the standard stocks. On July 16th, about a month later, 4 more common stocks were added weekly options, I should say. Amazon, Ford, Google, and Microsoft. And I have an asterisk next to Microsoft, and I'll explain why in just a short period of time. But on July 16th, there were weekly options available that expired on July 23rd. So we had 7 days essentially to trade weekly options on these 8 stocks. Last week, Thursday evening, right before Friday open, new weekly options were released on these 5 stocks: Barrick Gold, Baidu, Goldman Sachs, Potash, and ExxonMobil. So now we have a total of 12 stocks, 12 common stocks that have weekly options. Now, if you went through the simple math, you just noticed that I actually just reviewed 13 stocks. Well, why is that? Well, right now the current indexes that have weekly options are the Dow Jones and the SPX. Nope, forgot an S in there. So the Dow Jones Industrial Index and the S&P 500 Index, these are both AM settlement options. Of course, in their cash settlement, you don't convert into shares of the index. OEX and XEO, the S&P 100 Index, and the S&P 100 Index European style expiration. Again, these are cash settled, so you don't trade shares or purchase shares of stock to cover a short call. As of July 23rd, 2010, last Friday, the current ETFs that offer weekly options are EEM, the iShares Emerging Markets, FAS, the Bull 3 times financial, so it moves 3 times in relationship to the financial ETFs. FAZ, of course, is the Bear 3X Financial. GLD is the iShares Gold Trust. IWM, the Russell 2000 Index. The Cubes, SPY, and XLF, the financial sector Spider. And the common stocks that are listed now, the 12 common stocks that have weekly options are Apple, Barrick Gold, Amazon, Bank of America, Baidu, British Petroleum, Citigroup, Ford, Google, Goldman Sachs, Potash Corporation of Saskatchewan, and ExxonMobil. Well, what happened to Microsoft? Well, I'm not really sure what happened to Microsoft. Microsoft had weekly options available on July 16th. They expired 7 days later on July 23rd, on Friday. When the first series expired, a new series has not been released. And I'm currently looking for information